Okay, now we are on part 3, okay, fine, of our cash budget, okay. Remember, okay, on the last section of the cash budget, which is the payment section. All right. The first part that we are supposed to record is the cash purchases of trading stock. We are already given the amount for December. Now we need to calculate the one for November. Okay, let's go to the information and find out. We've got E. The business replaces stock on a monthly basis to maintain a fixed stock level of 200,000. Okay. What else are they saying? On F, the business buys 70% of its trading stock on credit. Okay. Creditors are paid in the month following the month of purchase to obtain a 5% cash discount. Okay. All right. So this is the information that we are supposed to use to do the calculation for the cash purchases of trading stock and also the payments to the creditors. All right. So I want you to follow me closely. If you check here, there is nowhere where they have written purchases of trading stock. Okay. So what do you do when you face a question like this? You check for the markup. You look for the markup. If you go back to the top, they say the business uses a markup of 80% on cost. The budget period ends on 31. So the moment you know the markup, it means you'll be able to find out how much was the cost of the purchases that were sold. Dang it. Okay. So okay, fine. So now we are going to say the total sales for each and every month, but anyway, we're not going to look at each and every month. We're only going to be looking at those months that we are interested in. Okay, for now, we need the cash purchases for November and December, is it? Okay, so we are only going to look at November and December. We calculate the cash. If 70% is also credit, it means 30% only is the one that is supposed to be for cash. But the first thing that you are supposed to do is to find the purchases by using the markup. Okay, let's start by the month of November. I'm going to do the calculation of cash sales. Okay, cash sales. Okay, cash purchases, sorry. Cash purchases. Cash purchases. The cash purchases. Okay, the cash purchases. Cash purchases. All right. So the cash purchases, we have got November sales. November, the sales are how much? 403,200. 403,200. Okay. And we need the cost of sales. Okay. So in order for us to get the cost price or the value for the trading stock, we are going to use the markup that is given. So in other words, it means the selling price is comprised of the cost price plus the markup, 80%, which means the selling price is 180%. So in other words, okay, the formula that you use anyway when you want to calculate the sales, of course, I'm sure you already know. You say the sales multiplied by the cost price percentage over the selling price percentage. Okay, so the sales are already given at 403 and 200 multiplied by the cost price percentage. Cost price percentage is always 100. The selling price percentage, it is the 100 plus 80. Okay, the cost price plus the markup, so it means it's over 180. Okay, so if you say 100 over 180 times 403,200, how much are we going to get? Let me go to my calculator and see how much I'm going to get after doing that calculation for the cash purchases. Okay, for November is 224,000. 224,000. It will give me 224,000. 224,000 is total purchases. Total purchases. Remember, they said the business buys 70% of its trading stock on credit, is it? So if 70% is credit, it means 30% is what? It is cash. So we are going to say times 30%. 30 over 100 is going to give us the amount that we are looking for. Okay? For the cash. Okay? So it becomes something like 67,200. Okay, so it's 67,200. I hope you understood that calculation. Okay, we use the markup. When we get after using the markup, calculation, we are going to get the total sales. When you get the total sales, remember 70% is credit and we only want 30%, which is the cash, which is 67,200. Okay, 67,200. Okay, now let's move on to the payments to creditors. Okay, payments to creditors, they have said that, okay, creditors are paid in the month following the month of purchase to obtain a 5% cash discount, is it? Okay, so to mean that the purchases which are the credit purchases which are going to be paid in November are the one that took place in October. Okay, the one that are going to be paid in December are the one that took place in November. Why? Well, they say creditors are paid in the month following the month of purchase, after 1 month, after 1 month. So if they are done in September, they'll be paid in October. Done in October, paid in November. Done in November, paid in December. Done in December, paid in January. Something like that. Okay, so the first thing now that we need to do is to find the October. Okay, it's only that for the month of November, they've already done it for us. We are only supposed to do the money for the calculation for December. Okay, so we are going to use the November, because from November we need the credit sales for November so that we can be able to find the how much is going to be paid in the month of December. Okay, so if you look at the total purchases that we have, we've got the total purchases of 224,000, and then we said cash is 67,200. So in other words, we are simply going to say okay, the payments to creditors. Okay, payments to creditors. Okay, 224,000 minus the cash 67,200. Okay, it will give us something like, okay, let me go back to my calculator. It will give us something like 156,800. 156,800. Okay, 156,800 are the credit purchases. Okay, these are the credit purchases. But remember what they said, there's a 5% cash discount, is it? There's a 5% cash discount. So we are also going to multiply that amount by, okay, let's see, 156,800 times 95%. We have removed the 5% from a 100% amount, which is going to give us something like, okay, 148,960. 148,960. Okay, 148,960. Okay, that is the money for that is going to be paid in December. 148,960. 148,960. Okay, it is coming from the purchases that took place in November. After 1 month, it is supposed to be paid in December. Okay, let's look at the loan repayment. Where do we have the loan? Loan. Okay, from the information that we are given, the interest, loan repayment 24,000, scheduled for 1 December. It's only going to be paid in the month of December. So we simply go to December and we write 24,000. That's when it's going to be repaid. And then the interest on loan for November, it has already been indicated. What about the one for December? Okay, remember the repayment is going to affect. Okay, so the loan, if we look at the loan from here, is 360,000, and there's a repayment that has taken place. The repayment took place when? Okay, on the 1st of December. It means by the end of December, when the interest is supposed to be paid, the loan is no longer 360,000. Okay, so this is the calculation for the interest on loan for December. Okay, the interest on loan for December, we are going to take the loan 360,000, we minus the repayment 24,000. Okay, which will give us something like 336,000. Okay, and then we multiply by the interest that is given there per annum. The interest is 10% times 10% per annum. Okay, and then which is going to give us 33,600. This is for 12 months, and then now we divide by 12 months. We divide it by 12 months, which will give us something like, okay, let me go back to my calculator and see how much do we get after calculating is 2,800 per month. 2,800. Okay. So in December, we are going to record 2,800. 2,800. Okay. The salary, including bonus for the store manager. Let's look at the salaries. The store manager earns 20,000 per month. However, from 1 December 2020, his salary will increase by 20%. He will also receive a bonus in December equivalent to his December salary. Okay, let's increase the salary by 20%. Okay, the salary. Okay, let me do the calculation somewhere here. The salary for the storeman. Okay, for the manager. This is for the manager. Okay, he earns 20,000. We increase by 20%. It means it becomes 120%, which means he's going to be earning 24,000 per month. Okay, so it's 24,000 per month, but they are saying salary including bonus for the store manager is also going to receive a bonus in December equivalent to his December salary. Remember, his December salary is now 24,000. So it means we are simply going to say 24,000 plus 24,000, the bonus. So which means he's going to receive 48,000 in the month of December. Okay, so December we are supposed to record 48,000. 48,000 is going to get a lot of money in December. Okay, and then the sales assistant salaries. Okay, the business employs 10 sales assistants, each earning 6,000 per month. They will receive a salary increase of 4% effective from 1 December. Okay, they do not get bonuses. Okay, so we are given there is no salary that is already given there. Let's calculate the salary for November and December. How many are they? They are 10, is it? There are 10 assistants. So we're okay for the month of November, we are simply going to say 10 times 6,000, which is equal to 60,000. Okay, and then for December we are going to say the 60,000. Okay, they said they are going to have an increase of 4%. Okay, so an increase of 4%, it means their salary is going to be 104% of the original. Okay, which is going to be, let me go back to my calculator and check my calculation for the salary. Okay, it is going to be 62,400. 62,400. So November is 60,000 and then December is 62,400. Okay, so let's record the salary. Okay, it's 60,000 here and then 62,400. Okay, I hope you understood that calculation. Let's move on to drawings. The drawings, okay, where's the adjustment for drawings? Okay, J. The owner's monthly drawings are as follows: goods 5,000, cash 30,000. The owner intends increasing his cash drawings to 50,000 in December as he's taking his family on a holiday. What you simply have to remember when you are looking at drawings is that we only consider cash items. The drawings for goods, we are not going to consider them. So for the month of November is 30,000, is it? Because those were his monthly drawings for cash. But in December, it's going to increase to become 50,000. So it simply means in December, it's going to be 50,000. Okay. And then let's move on to equipment. Okay. K. Equipment costing 20,000 will be purchased for cash at the beginning of December. So it's going to take place in December. How much is it? 20,000. 20,000. Okay. It seems as if we are almost done. The only item that is remaining is other operating expenses. What are they saying? L. Operating expenses are expected to increase monthly in line with the current inflation rate of 5.7%. So it means these operating expenses in December increased by 5.7% from the ones that were given in November, which we do not know, is it? So in other words, we are saying that this amount is this amount has an extra 5.7% from the amount that was shown in November. Okay, so in other words, it's actually 105.7% of what was there in November. Okay, so let's do the calculation. We have got 145,866. Okay, and then we want the 100% amount without the 5.7. Remember, this amount has got the 5.7%. Okay, so we are going to say times 100. We want the 100% amount, or we want the 100% value. without the increment of the inflation 5.7. So it means here we're going to say over 105.7. Okay, so because this amount is 105.7, we want the 100. Okay, so when we do that calculation, we are going to remain with something like, let me go to my calculator, it's going to be 138,000. Okay, 138,000. Okay, so the calculation is this one that I've done. 145,866 times 100 over 105.7. We just removed the 5.7 because they said each and every month they are increasing by 5.7. So it means the money for November is 5.7 less than the money for December. Okay, so now we are done with everything. Let's calculate the totals for November and for December. Okay, the total for November, okay, let me go on to my calculator. Okay, the total payments is 456,520, 456,520. The total for December, let me see, the total payments for December is 580,026, 580,026. Okay, so we have got the total receipts, we have got the total payments. Now it's time for us to get the cash surplus or shortfall. Total receipts minus total payments will either give us a surplus or a shortfall. Okay, 1,496 minus 456,520. We can already see that there is a shortfall there. It's going to be something like 65,024. 65,024 in brackets. It's negative. Why? The total payments are greater than the total receipts. Let's do the same thing for the month of December. 508, okay, 445,644 minus 580,026. We are going also to remain with 134,382. 134,382. Also a deficit or a shortfall. Okay. All right. So what is the next step? We have now calculated our surplus and our shortfall. The next step is for us to identify the balance of at bank at the beginning. Okay, if you look at the information that is given, we've got a favorable bank balance of 138,400, which is the one which is already recorded here, is it? We add it, okay, fine, to the surplus or to the shortfall that is given there to get the balance at the end of the month. So the balance at the end of the month for the month of November is actually going to be, let's add these two amounts, it will give us something like 73,376. 73,376 is the balance at the end of the month of November. Okay, so the balance at the end of the month of November is going to be the balance at the beginning of the month of December. I'll put an arrow here so that you will remember this is the balance that you take here, 73,376. Okay, so you also add it to the surplus or to the shortfall that is given for the month of December to get the balance at the end, which is 61,006. 61,006 is also negative, which is an always, remember, every time when we've got a negative cash balance, that is a bank overdraft, is it? Okay, learners, this is grade 11s. I hope you understood all my calculations. This question covers almost everything on the budgets, and if you have managed to master each and every calculation that I have done, then you never have any problem in any of the questions that you're going to face on the cash budget. Okay, do not forget to like this video once again. Thank you.